Welcome to Channels Business Global with me, Juliana Olayinka, from our studios here in London. Over the next half hour, we'll be looking beyond the business headlines by giving you in-depth perspective on the stories that are affecting all of us. Coming up on today's show. Ahead of this month's annual World Economic Forum gathering in Davos, Channels Business Global received an exclusive invite to the organisation's Global Risks Report 2020. We'll be giving you an update on the notable areas of interest in the political economic landscape. And later, I'll be speaking with the CEO of the boutique investment firm A&O Acquisitions, Wite Oduneye, about how Nigeria can leverage upon the opportunities that are likely to come out of next week's inaugural UK-Africa Investment Summit. The event will be hosted by Prime Minister Boris Johnson. But first, our business correspondent Simon Pusey joins me for a breakdown of this week's headline-grabbing stories.
Yes, Juliana, as you say, the world's two biggest economies have signed an agreement aimed at easing a trade war that has rattled markets and weighed on the global economy for years now. Speaking in Washington, US President Donald Trump said the pact would be transformative for the US economy. Chinese leaders called it a win-win deal that would help foster better relations between the two countries. China has pledged to boost US imports by $200 billion above the 2017 levels and strengthen intellectual property rules. In exchange, the US has agreed to halve some of its new tariffs it has imposed on Chinese products. However, the majority of the border taxes remain in place, which has prompted businesses to call for further talks. Mr. Trump has said that the deal sets the stage for a stronger relationship between the US and China. He said, "Together, we are righting the wrongs of the past and delivering a future of economic justice and security." Now, in news that may well be linked to this agreement, the US has reversed its decision to brand China a currency manipulator as the two countries prepare to wind down their trade war. The US said it made the change because China had agreed to refrain from devaluing its currency to make its own goods cheaper for foreign buyers. The deal is aimed at de-escalating the tit-for-tat tariff war that two countries have been engaged in since 2018. The US Treasury Secretary Steven Mnuchin said China has made enforceable commitments to refrain from competitive devaluation while promoting transparency and accountability. President Donald Trump has repeatedly accused China of allowing the value of the yuan to fall, making Chinese goods cheaper. But on Monday, the US said the value of the yuan had appreciated since August at the height of the trade war. Moving to Germany, and the German economy grew by 0.6% last year, according to official figures. That's the weakest performance they've seen since 2013. The German Statistics Office said growth was driven mainly by household spending. Business investment in machinery and equipment was weaker, however. Exports did grow, but more slowly than in previous years. Industrial production, excluding construction, fell by 0.5%. The Statistics Office has not yet published full data for the final quarter of last year, but has enough information to assess the impact on the year as a whole. Growth in the final 3 months of last year was likely to have been around 0.1% to 0.2%. That follows a very weak growth in the third quarter and a small decline in economic activity in the 3 months period before that. Those previous quarterly figures showed Germany avoided a recession last year in the sense of 2 consecutive quarters of contraction, but they and the new figures for the full year show Europe's largest economy struggling to generate growth. And finally, Amazon boss Jeff Bezos has announced a major investment in India, saying the country is a key growth market. Mr. Bezos said his firm will invest $1 billion in digitizing small and medium businesses, allowing them to sell and operate online. Speaking at a company event in New Delhi, he also said the 21st century is going to be the Indian century. The e-commerce billionaire's 3-day visit to India is expected to be marred by protests, though. Thousands of small traders across 300 cities have planned demonstrations against what they see as Amazon's negative impact on the local retail market. They allege Amazon is driving them out of business by offering sharply discounted products and favouring a few big sellers on its platform. Amazon, though, deny the allegations.
Thank you, Simon. Here's some other business news from across the globe. The Beijing-Shanghai high-speed railway, the operator of the rail link between China's two biggest cities, has debuted on the Shanghai Stock Exchange. Yesterday morning, the company saw its share price open at 5.86 yuan, the equivalent of about 85 cents per share, surging from its issue price of 4.88 yuan. Analysts suggest that the listing of the railway operator will deepen the reform of state-owned enterprises, promote the optimization of capital structure, and enhance the high-quality development of the railway sector. Barcelona have overtaken Real Madrid to top the Deloitte Football Money League for the first time. They've also become the first club to break the €800 million revenue barrier. The leading 20 teams together earned €9.3 billion last year. 22 years ago, the total for the top 20 teams was just €1.2 billion. Industry experts say behind this steep increase in revenue lies increasingly lucrative broadcasting contracts. Over the past 5 seasons, income from broadcasting has risen by 11% a year. Argentina's consumer prices rose 53.8% in 2019, the biggest increase in 28 years. The revelation marks a major challenge for the new administration of President Alberto Fernandez in Latin America's third biggest economy. Data Institute INDEC said the cost of living had increased by 3.7% last month alone. The hardest hit sectors were health, communications and home maintenance equipment. Argentina's inflation rate is one of the highest in the world and second only in Latin America to crisis-hit Venezuela. Angolan billionaire and former First Daughter Isabel dos Santos has described the New Year's Eve court order, which led to the freezing of her assets, as a witch hunt engineered to weaken her father's influence. The government of Angola says it's owed $1 billion by dos Santos and her business associates relating to her time as chairwoman of Sonangol, the country's national oil company. Now over to our first topic. Channels Business Global received an exclusive invite to the reading of the World Economic Forum's Global Risks Report 2020. The data provides an opportunity for the financial world to place the global risk landscape into context at the beginning of the new year and identify priority areas for action.
We are here for the launch of the Global Risks Report, where for the first time we have the 5 top risks over a 10-year horizon. Our respondents from around the world are ranking them all environment related. So that's the first time in our 15 years working on that. And that's, of course, coming on the back of a year 2019, which was a big wake-up call, I think, in the public consciousness around this. What we do also is that we work in different regions where we did a survey of business leaders, for example, this past summer. And with regard to Sub-Saharan Africa, there are there is a clear view of probability of socioeconomic risks, and particularly when it comes to unemployment, youth unemployment, the risk of failure of certain governance models, etc. So I think based on these two, I think of course we have a number of respondents from the African continent that are contributing to the survey of the global risks. And then if I look at the survey that we did specifically with business leaders in Africa, there we see that the priority in terms of what they are looking out for in terms of risks are more in the socio-economic governance area.
Depending on which part of the economy is transitioned and how quickly. Actions to reduce emissions in one carbon.
I think it's important for organisations like the World Economic Forum to really understand the dynamic in Africa, and again at different levels, because even obviously there's a lot of different issues playing out depending on where about in the continent that we're really talking about. So it's both a conversation in terms of where there is where there is a need for transition around existing industry. What's the conversation there? How does the responsibility sit within the local business community to take part in that? In addition to also making sure that in the context of electrification of rural Africa, for example, we can really see investment going directly into renewables in those locations and smart grids so that we can actually start leapfrogging. So I think, depending on where you sit in the system and where you sit in terms of what issues are relevant, I think it's a very different conversation, and we need to really recognise that.
As I'm sure everyone in the room knows if you've ever been through ISO certification, and the sustainability measures we put in place actually overcompensate.
Well, I think climate change is clearly a global issue, and so I would expect that the dialogue should grow through time in the major countries in Africa between business and government around climate. I think there's both opportunity, there's risks that will come from climate that faces society. There's also opportunities for business to look at ways that they can contribute to this through climate resilience investments and use of renewable energy and other types of developments. So I think you should see an expanding dialogue. I mean, we would expect climate to be a significant global issue in all regions. Climate has been a growing issue, but it has been present there for 5 years, and we haven't made as much progress as we should in either the public or the private sector. I think I have some concerns with the public sector ability to respond because in a multinational way, because of the fractured geopolitical environment that we're living in. So I do think there's likely to be more progress made through the private sector, and I think because I think more businesses will see that it's in their commercial interest to address climate, to attract new customers, to attract employees, to attract investors, and really just there's bottom line opportunities for them. So I think the pressure that's coming now in the private sector, I'm hopeful will make the next 5 years more progress than we've had in the last 5.
And it's a big risk for a lot of the economies in the Middle East and North Africa. And again, we work.
What we do is we provide a radar screen for decision makers to make informed decisions, and we point to trends. So if we look at the trends, I think there has been an undeniable move in the global community. You see it also with now the financial services industry, investors, also the energy industry is actually, you may know, they are on a proactive footing when it comes to the Paris Accords and other related issues. We also write about the need to really have an intelligent conversation around what people call the just transition. So I think we have very complex systems. They're all interconnected. There are no easy, simple solutions. And we're now seeing that the train is leaving in a certain direction, but we're not naive about number one, of course, the timelines, but also how complicated some decisions will be. That is the just transition, I think, is an important thing. We write about, it's not Nigeria you mentioned, but we, for example, write about Canada, where if you poll people and you ask them, well, do you think that climate change adaptation and mitigation is important? They will say yes, it's important, majorities. But similar majorities will also say no if you ask them whether they are actually individually prepared to bear additional costs that are related to it. And so really this interplay of figuring out the social and economic model to really help this transition is hugely important. But I think we see a clear movement in that direction.
Climate. So the pressure is also getting channeled to the public, to the private sector, and that's really where I want to focus most of my comments, which is
what we've seen in our analysis. What we do is we survey people, but then we also conduct our own analysis. We quote reputable organizations, and we also consult experts. So we've seen more and more, of course, scientific evidence coming out. Also in our survey, if you look, we talk about interconnection. So more and more of our respondents are linking, for example, extreme weather events and climate change. Even if the scientific community would stop short of saying there is a clear link, but whatever it's worth, the expert community, there is every year there is a stronger link in the survey at least. And so it is important that we look at this landscape, and that kind of then informs our analysis this year.
I think the science is absolutely kind of, on our side in the context of it's not about something you believe in or not believe in, it's just fact. So it's really about kind of moving away from debates around whether somebody believes or doesn't believe, and focusing more around, okay, well, what do we know is the case? What do we know is happening? What do we know needs to kind of be dealt with in order to shift gears? And I think, most leaders who understand and want to kind of really invest for the future are, thinking about this in the longer term. term. And again, even some of the the economics now is kind of becoming much more fact-based. So it's no longer rhetoric as to kind of how much something may or may not cost. It's just clear, okay, well actually, this was this amount of money and now that cost is coming down, so we can move ahead with investment into some of these low carbon technologies. So I think, the time of any kind of, conversation around is it, isn't it, is completely, a decade old already, and really now it's about getting on with what we know and dealing with the climate emergency that we're facing.
Coming up, we'll be looking ahead to the opportunities that are likely to come out of Monday's UK Africa Summit. See you after the break.